It's been an extraordinary couple of weeks on the mortgage front. Rates have been cut and cut again, and there's still apparently room to move and negotiate with your lender if you want to. For a look at the picture going forward, we're joined by Bernard Hickey from www.interest.co.nz. Welcome. Tell us, why are the rates falling?
Well, there's a couple of reasons. The banks are being much more competitive. They're very profitable at the moment, and they have plenty of cash, almost $50 billion in cash to lend out. And so they're trying to win market share, and at the same time, wholesale interest rates are falling. So they're taking advantage of these two drivers to go out there and try and hunt down new customers.
It's like they're overstocked at the moment. There's too much product on the shelf.
Exactly, and they're keen to get it out there.
But banks aren't philanthropic. We're not, as mortgage holders, sitting at home going, oh, the banks are being kind to me, because there's a flip side to this, isn't it?
Yes, they're very keen to keep customers, and because overall lending has been pretty weak in the last few years, the way a bank increases profit is to increase its lending or take market share off its competitors. And at the moment, they're very competitive for market share, and so that gives the customers more power.
So to get their business then, do they start cutting things like the amount of money you need to get a mortgage? Do we start to get into dangerous territory here where people will borrow more than they need because money's cheap?
The banks have eased up on their credit criteria in the last 6 to 12 months or so, quite substantially. So now there are 95% home loan deals that are going out there. Multiples to income have increased substantially, and the banks are really fighting hard for business. There's two ways you can do that. You can cut the price and you can lower the standards, and the banks have done both.
Oh. OK, so let's stop talking about the banks and talk about us. If I'm sitting at home and I've got a mortgage and I'm floating, which it turns out a huge majority of New Zealand are now, can I call and say, can I have a better rate on my floating mortgage?
If you're paying the advertised rate for floating, which is about 5.7%, and you're on time on your payments, you're a good customer, and you've got plenty of equity in your house, you should ring your bank right now and ask for something like 5.2, 5.3%, because the banks will give it to you if you ask and you're a good customer. Unfortunately, for most customers who just sit there and don't look at their rate, don't know what their rate is, they'll put up with that 5.7% when they should really be paying 5.2, 5.3. So ring that bank now and ask them for a better rate or threaten to leave. And this is the thing, New Zealanders are not very good at telling our bank, well, we're going to go somewhere else. And there are real options out there.
OK, so if I'm a mortgage holder again, which I am, what's involved with leaving? If I'm nervous about ringing my bank and saying, I'll leave if you don't give me a better rate, is it hard to leave your bank? Is it complicated? Does it take time and energy?
It's not hard if you're just moving your mortgage. Now, moving your main bank account is a little bit harder, but for most people, you can have your main bank account at one bank and your mortgage somewhere else. So if you're not keen to do it yourself, you're a bit nervous, then there are brokers out there, mortgage brokers, who will exercise your power to try and get a better deal for you.
Going forward, what's this looking like? KiwiSaver, we saw, extended their deal. The main banks in New Zealand have got on board. They're all lowering their rates. The whole fixed float thing is happening. Do people need to take advice at this point? Do we need to be nervous about the global financial crisis? You know, where is the sort of the strong line going forward?
Well, most people in the markets are saying that the official cash rate, which is the basis for floating mortgage rates and interest rates generally, may fall in the next 6 to 12 months. However, economists see next year interest rates rising. So there's an interesting question about what you do here. Do you bank your windfall in a way? Do you have a big party, or do you use it to repay your mortgage faster? And with the uncertainty around on the global environment, many people are saying, hey, rather than actually go and have a party, you should put that money back into your mortgage, repay it faster.
Bernard Hickey from interest.co.nz, thanks for joining us this morning.